Welcome to TradeTheNBI.com. This is John. This report is for the 12th of January. Well, we dipped down just above that 46.13 level, but once it got below the 50% algo, kicked in buyers a little bit later. It's a beautiful thing. All those call buyers who bought everything faded, wiped out a lot of that, and then flipped it right around just as people were getting excited to think, oh, short again. And that's exactly the nature of how markets work. Anything they can do against it. But as you can see, we could already tell that when we had the magenta rising, that was more of a bullish move. So it became one of those where on dips you're looking for the push. 18 at the magenta right here is over at 17.28. Post market still going on right now, and that's enough to get magenta over gold, the yellow line right there, and that's bullish in its broad nature. Not to mention short-term buyers clearly rising. The pivot up of midterm buyers as well. We should start to see the shakeout respond to that. Still was rather negative with the dips below the red line, but now we're looking at move back above green, and that can have a little bit more legs. Doesn't mean that we aren't going to still retrace back to fill those dips below the positive, the red line here on the extreme histogram. It's just when it's a long tail like that, a little bit less potency for one to come back to it right away. And then we have on the NQ, likewise, this was 23%, did the same thing. It had its crossover and moved right above white. So all those things from a daily standpoint, when we see them on the NBI indicator, usually give pretty clear indication that things are moving positive. Now the critical one becomes pivots lower below the 25 level here. Will produce weakness. So I'm not suggesting that we aren't going to see more back and forth here within this, but clearly this was a critical buy the dip protection right as we got to the scary levels. But from a NASDAQ standpoint, it really took care of filling in the positive extremes that started right back here at the end of October, and took care of it from that standpoint. Nice and clean. Euro just keeps going back and forth between this 38.23, right in the middle 113 range. Gold taking that pop. We still expected gold to continue its rise. It's just when markets are turbulent and people have to trade out of things. The biggest question for us on that setup is always going to be interest rates and whether or not people are going to be moving towards treasuries defensively or as just to avoid risk. But oil peaking back up to the 100% level, and that's problematic. Maybe not yet, but down the road will be. And there you have rates continuing to fall just a bit as people jump back in. And this is going to be an interesting one, especially over the next coming weeks. I mean, Powell came out and was very like, well, we'll be softer, and that's all the market needs to hear, that they're really not going to follow through with any changes. They don't see the need for it for that much. They just have to say it to quell. Who knows who they're trying to satisfy with that setup, but I think it's to slow down the exuberance that the market had been experiencing. Bitcoin, again, off that hit of the positive extreme fill, bouncing back nicely, still puts it in the mid 43 range, and clear. I mean, there's nothing about that that suggests that it has to fade from that. In fact, you've got DOC with cyan under red now, so all things are looking nice and rosy in the crypto world. And we'll go to the 50K, so we have the long buy, sold out for briefly in that, and that turnaround pretty sudden within that context, and so the short setup did not fare well. That was easy to see, though, from our regular charts intraday, and that moving forward, particularly when we get magenta back up over yellow, and you have blue also above the gray, and that started a little bit earlier. And that may even be an adjustment I'll test to see how it affects their short numbers, because that's always a good turnaround spot. Intraday, it's quite fun. We started off with a spike. I had marked the positive extreme, put that out there. Sure enough, filled the positive extreme, and then dipped below the other previous algos, and then kind of based a little bit. And there's that similar kind of thing I talk about where the magenta crosses over, and even if you have some doubts as to whether or not it's going to hold up, still plenty of time before you finally get a read. Even before the red, by the time it gets to the green is where it's crossed over white completely. But that rising of both the blue here above the gray line, as well as magenta over yellow, clear, that was going. And also you had pivotal at this part was the DOC with green moving over cyan. Eventually cyan just moves underneath red this similar time, and that one kind of faded a little bit earlier and came back to here. We put in a P2 right at the same time. We had the exact same kind of configuration where the magenta is spiked back above and the green crosses over, and from there that was it. That's all it took, and it was just straight up and straight across. When we did get a little bit of weakness, wasn't very long, and again that same pop-up where you would expect that clean short setup from that white spike, but once the magenta pops back above, it's a flip over, and it took place pretty darn quick. Flip across there. That wasn't enough. The secondary one was clean, and pretty much rode it to all the way to the end. Now, there's a series of positive extremes throughout all these setups, as well as the latest pop there, but they're literally exactly on where we've had the previous ones at 46.91, 47.02, and you can see it just above that now, holding up at a little bit of a soft spot there. Of course, in aftermarket, they can do all sorts of wonderful things and play back and forth with it, but very happy with how that reads, and pretty easy to follow in this space. As always, though, I will continue to update you and post anything relevant. Trade well. We'll talk to you later.